This is Trade Flow News, bringing you relevant news and insights from around the world. Trade Flow News, enabling trade for SMEs and economies worldwide.
Welcome back to Trade Flow TV. You know the drill. Markets move fast, and if you're not ahead, you're under. It is Friday, August 28th, 2026, and we are closing out a week where sovereign trade policy and extreme weather completely overrode paper markets. First up, the 60-second commodities flash, copper's tariff-driven record. The red metal just shattered resistance, surging to $6.72 a pound. The market is actively pricing in aggressive U.S. tariff threats that threaten to completely wipe out any projected global surplus and severely restrict metal flows into North America. Meanwhile, Southern Copper overtakes Rio Tinto. Shares surged 15% to a record capitalization of $183 billion, officially overtaking the mining giant. Soft commodities are flashing red. HedgePoint just slashed its cocoa surplus projection by 66% due to severe El Niño weather risks across West Africa. Verified reports out of Ghana indicate severe drought-induced crop failures, while Brent crude anchors steady near $86, keeping a floor under freight costs. Let us take a deep dive into why U.S. tariff threats are causing record divergences and how Southern Copper's valuation proves the premium on physical reserves. The verified data hitting global terminals this Friday morning proves that we are no longer in a globally synchronized, frictionless market. Protectionism is the new driver. Look at the copper tariff shock. The U.S. spot price has blown out to a massive premium of over $2,500 a ton over the LME cash price in London. When a pure-play copper producer overtakes a diversified giant like Rio Tinto, it signals a paradigm shift. Owning physical atoms in the ground is now the priority. Look closer at the El Niño agricultural threat. A 66% reduction in next year's cocoa surplus projection guarantees brutal margin compression in 2027. Drought decimating Ghana's grain harvest proves West Africa is facing a caloric deficit, pulling supply away from a tight global market and keeping a firm floor under Agflation. Here is the trade flow take. Welcome to the Friday reality check. Sovereign tariffs and El Niño are actively breaking the global supply chain. Do not step in front of the copper momentum. Localized hoarding has begun. Maintain exposure to copper miners, keep energy hedges locked near 86, and brace for volatility. Stay liquid, stay sharp, have a highly defensive weekend, and we will see you on Monday for the September Open. See you on the next one.
That is all for today's news on commodity markets. Stay tuned to Trade Flow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at Trade Flow News, which allows you to watch our program on your mobile device or desktop to receive information from there.